Madeline Hume. She is from Morningstar, along with our education reporter, Aarthi Swaminathan. Good to have you both here. And Madeline, I think when you look at what the 1 year at a 4-year institution might cost somebody, it is breathtakingly shocking. And yet there is some good news, and really good news, about the performance of 529 portfolios. Tell us about that.
Absolutely. Thank you for having me here today. It doesn't take a college savings expert to realize that 4-year university expenses have gone off the rails in the past few decades. Families are finding it increasingly harder to save and afford the cost of college. The problem is particularly acute because tuition price hikes have grown 3 times faster than the price of other goods, as measured by general inflation over the past 20 years. That means that a dollar saved hasn't been able to keep up with the price of tuition on its own. What's interesting about 2020 and the pandemic is that for the first time, we actually started to see price hikes let up slightly for families. Many universities instituted price freezes as colleges pivoted to remote learning, and tuition inflation sank nearly 50% from its historical 10-year average of 2.8%. That means just a shred of relief for families hoping to save for children. But even so, with everyone so worried about inflation increasing more broadly, it's worth pointing out that tuition inflation is at its lowest level in the past 10 years, and it's still neck and neck with general inflation at 1.4%. Right. So families saving for college have really been living the market's worst nightmare for the past 20 years. And that's why 529 plans have continued to be popular.
Hey, Madeline, just want to jump in here. So a lot of people have been moving for COVID. So has there been a change in volume of the new 529 plans, or what has been going on with the portability when you move from a state, in case, for example, if you transition completely to remote?
Yeah, surprisingly, what we've found is that the net impact of contributions and withdrawals to 529 plans has been relatively steady over the past year, in line with historical norms. As far as transfers go, for investors that are looking to make the shift because of a relocation due to COVID, transfers from one plan to another, which are called rollovers in 529 jargon, are a bit of a high wire act. It's usually best to consult with a professional before making any jumps, because how you get from point A to point B can make or break your savings experience. From a federal perspective, the U.S. government allows you to roll over any or all of your 529 account from your current 529 plan to a different 529 plan once over a 12-month period.
Madeline, what's the biggest mistake that someone makes when they're planning for their 529s or when they're selecting their 529s? I mean, what is something that people should always be looking to avoid?
Absolutely. One of the key considerations when looking at a 529 account is the potential tax benefits. About 50% of the country lives in a state that allows for state-specific income tax benefits on contributions, which can make a significant difference in terms of offsetting the fees that 529 plans charge.
Madeline, so some states have been seeding 529 plans. They've been putting a little bit of money to encourage people to take on these plans for, especially, lower income households. Can you speak a little bit to whether that has become more prevalent?
Absolutely. We're starting to see some pickup in child savings accounts. Most recently, states like Illinois and California are considering potentially rolling out these programs for individuals. And in 2019, Pennsylvania rolled out the Keystone Scholars program, which does allow for stipends for children. What's important to consider is that for 529 plans, investors that are making under $80,000 a year, which these plans often benefit, don't receive the same impact in terms of their federal tax benefits that an investor in a higher net income tax bracket would, because their capital gains are already not taxed by the federal government, which those higher income brackets are.
Madeline, just you and I talking here. What do you think of 529s? Are they still a viable solution?
Absolutely. As far as tuition inflation goes, it is an incredibly high hurdle for families that are looking to save for their children's future. And every year that families put off contributing to plans like 529 plans, they lose the potential for their investments to compound, even if they save the same amount of money later. For an investment of $50,000, even an additional year can result in an extra $5,900 when a child enrolls for college. The important thing to note, too, is that the federal benefits have been expanding in recent years for qualified tuition withdrawals. It used to be that 529 plans were just for children saving for your traditional college education, but that's no longer the case. The 2017 Tax Cut and Jobs Act and the 2019 Secure Act have expanded those benefits to include student loans, to include the the current cost of apprenticeships and other programs like that. And so the expansion of that has been really beneficial to individuals who aren't taking the traditional path towards higher education.